We're going to shift gears right now to another huge story on this Friday. It's still earnings season. You can see shares of DraftKings down just a little bit after the betting platform reported its third quarter earnings this morning. Company raked in $213 million in top line revenue for a net loss on the bottom. So for more on their earnings, let's bring in Jason Robbins, DraftKings CEO. Jason, great to have you on the show. I want to talk a little bit about some of the kind of interesting threads that came through that report in the third quarter. Obviously, Arizona and Wyoming are now huge new markets for DraftKings with their legalization of online sports gambling. Just wondering if you can give us kind of the breakdown of what you saw in the third quarter.
We had a great third quarter. Really just a number of amazing metrics in terms of growth. We launched those two new states you talked about. Arizona in particular was just absolutely well beyond anything we expected. We acquired our first 100,000 customers there in hundreds of days less than it took us to acquire our first 100,000 customers in states like New Jersey, Pennsylvania, and Indiana. We saw a launch of DraftKings Marketplace in Q3. We're very excited about that. We think that could be a big contributor going forward. We migrated from our previous third-party supplier to our own in-house technology platform and bet engine. That was the largest tech project we've ever undertaken. It was about 14, 15 months. And we actually, did it 1 month ahead of schedule. Already seeing really good initial innovation and product development coming from that now that we control our own destiny there. And then just the growth was off the charts. We had 2 months of basketball and hockey last Q3. So from a comp standpoint, we had a packed sports calendar in Q3 of 2020. But despite that, we still grew the top line 60%. States that are more tenured, like New Jersey, are still growing at a very rapid rate. And then, of course, many new states to come, not just the ones we just recently launched, but there's other states that have legalized this year, such as Louisiana, Maryland, and New York that have still yet to launch.
Yeah, Jason, it's an interesting point that you bring up about the top line because, the demand is obviously there for these types of products. But give us a little bit of a breakdown in terms of how the industry, not just DraftKings, is approaching the bottom line, because I think you fielded a question on the earnings call earlier this morning, but there's some questions about the profitability of the sports betting industry right now. And some of that might just be you investing and trying to scale up. Obviously, that's kind of an expensive thing to do, especially in the early innings of this development. Give us some color in terms of how you're thinking about profitability in this industry in, let's say, the next 3 to 5 years.
Well, this is a very unique market because there's been regulatory suppression of a legal market. There's been a thriving illegal market, and therefore this is not, like many new products, something where the market is growing as the legal products come to market. There's been a huge illegal market for many years. And therefore there's a ton of demand, a ton of customers out there that are just ready to go when new states open up. And I think for that reason, you're seeing really strong payoffs. We're getting great CACs on our investments in new states that are really, below our expectations dollars wise, meaning better than we expected, cheaper to acquire. And the volumes are absolutely out of this world. So I think that's a thing that's really unique to this industry because there is so much pent up demand from many, many decades of, not having a legal option in most markets outside of Nevada. And that's the time you invest. And we're very data driven in this. We look at 2 to 3 year paybacks on a customer level. We look at a path to profitability for any new state that's 2 to 3 years. The only state that we had previously talked about that reached that was New Jersey. That was, on the lower end, closer to 2 years than 3. We have a couple other states that are just coming up on 2 years right now that we'll talk about, once we get a full year of data in Q1. But we continue to believe that that's the right playbook. 2 to 3 years is a decent path to profitability, and then after that, there's a lot of value to be created. And I think smart companies that are able to be very data driven, like we are, and feel conviction in the investments they're making because they're analytically backed, now is the time to press the gas.
How important are other types of revenue streams beyond just betting on the spread? A lot of people just look at a game and they say, well, who's going to win, who's going to lose? How important are things like micro bets, in addition to other types of complete different platforms like iGaming, important to that growth strategy?
Well, I think they're very important for a couple reasons. One, customers want them. And if you give customers more of what they want, they're more likely to stay loyal to us. They're more likely to come to us in the first place. And I think product innovation is going to be a big deal in this industry in the years to come. And we feel like we're at the forefront of that. I also think they're important because it continues to add LTV to the customers. And the more LTV you add, the faster you can get those paybacks. And the more you can justify investing in customer acquisition, it's still a healthy payback period. So I think all very important factors, both the customer side and the financial side. The other thing I would mention is it goes even beyond just the betting products and games for us. We launched our NFT marketplace recently. That's off to a really exciting start. We have plans in the media and content business. We're really starting to, I think get some real good traction behind some of the things that we're building there. So I think for us, it's not just about the games and the betting products, but having a really wide and rich portfolio of products and having a really strong ability to both acquire customers using different products and also to cross-sell our customers once they're on the platform. And that's what really creates that flywheel of customer acquisition LTV.
Jason, I wanted to ask about some interesting commentary and color that you had in the earnings report. You noted that NFL bets were actually favorable for the bettors, not the house, because all the good teams were winning and all the bad teams were losing. So all these parlays were hitting. Could you just give us a little bit more color about exactly how that impacted your earnings this quarter?
Well, of course, it's always, varies game to game, but a general rule is that if the favorites are hitting, and in particular, if big favorites are winning, and if the overs are hitting, that's better for the customer and worse for the house revenue-wise. That said, I think that, from a long-term perspective, this is great for us. It's great for the customer and great for us. People, are coming on platform for the first time, particularly in these new states. We also just launched Connecticut a few weeks ago. Those customers are getting great experiences. They're winning. And I'd much rather have the customer winning early in the season and early in the life cycle of the market than later. I think that bodes well for future retention and loyalty. So I think it's actually a real win-win. And, as far as how it impacts the financials, there's always going to be variance in that because it is so, the sportsbook product at least is so dependent on game outcomes, in particular in a sport like NFL, where there's a more limited number of games, and in particular in a quarter like Q3, where there's only 3 weeks of NFL, and it's such an outsized portion of the, the betting handle that we get in Q3. Despite only having 3 weeks, there can be a lot of variance to results driven just by a few bad outcomes in a few games. And I think this year was sort of historical in that sense, even though we had a really great reversal of that trend for the house in the last week of October. Going into it, October was on track to be industry-wide the first losing month in almost a decade. I don't think it quite got there, at least, not from our standpoint, but that just tells you sort of how historically great for the customer this has been. And I think that's a really good thing. Like I said, at this stage of the industry, that's what you want.
Yeah, a lot of upsets on that October 31st day. Of course, maybe we'll see if the Jets can get some more upsets, which might help you guys out. But Jason Robins, DraftKings CEO, thanks so much for stopping by the show today.